Well, a little bit ago, we got our new ethanol production numbers, and I wanted to run through those for you and just see if they really had much in the way of market impact today or not. On the surface, it doesn't appear that they probably did, because there wasn't a whole lot of change from what we had last week. Now, of course, keep in mind, last week, of course, was a holiday week. So what we had was average production in the U.S. at 935,000 barrels per day. Now, that compares to 934,000 barrels per day the week before, so it only jacked up by 1,000 barrels per day, and that's across the entire nation. So basically about the same. Now, the four-week average stands at 950,000 barrels per day. The ethanol stocks, well, they did decline a little bit, down about 200,000 barrels, down to 23.3 million, so that would be a net positive. At least a little bit, and the imports remained at zero, so nothing coming into the country here this past week. All right, let's take a look at our current prices. On the corn, we had an overnight export sale of corn, and it was 102,616 tons. We don't know who it went to, though. It was unknown destinations. And we did have the corn actually coming off of that overnight high when it got up to 502 3/4, so it officially broke the $5 mark. But then it fell back away from that and actually sold off on the open. And now we're back up to 496. So it's just kind of clawing its way back up toward $5. We're up 4 1/4 cents from our close yesterday, so it's working on it. Meanwhile, in the soybean trade, we have the March contract now at 1367.5. That's up 20.5 cents from our close yesterday, but it's still off of our overnight high by about 11 cents or so. I want to stop right here and bring in Brian Hoops of Midwest Market Solutions and talk about this. Brian, on the soybean trade, I've heard several people talking about the fact that, well, it's still pretty important on the production in South America. I have heard several folks talking about the fact that, well, there are chances of rain in key growing areas, especially in Brazil this coming week. But yet some say maybe it's not widespread enough to amount to all that much. So what do you hear from your sources now?
Yeah, good morning, Marlon. The longer-term forecast, I think, is what is most concerning to the trade and what the market's looking ahead towards. You know, there should be some rain chances in the near term for some of the states, and there has been some rain that has fallen. But the longer-term forecast still says hotter and drier trend that's been in place is going to continue to be in place. And that, I think, is what is forcing a lot of premium into these prices. We've seen big gains in the overnight. That's been our pattern. And then during the day session, we kind of trade within those overnight ranges, and then we make new highs again in the overnight. And that pattern seems to keep repeating. We rallied soybeans into some weekly resistance overnight, right around 1376, and pulled back. And corn breached the $5 mark before pulling back a little bit. So we're trading below a little bit of some major weekly support, and it may be like we traded around the $13 mark. We knocked our head against $13 for a few times and eventually broke through, and then it was off to the races, and that may be the case with that 1376, 78 weekly support or resistance area.
I want to take a look at the wheat market, too. And the wheat market was higher overnight, and now you can hear that backup beeper going. We have the March wheat in Chicago at 649 1/4. Now we're down 4 3/4 cents after a high of 660 1/4 overnight. So that could be significant. Remember, we made new yearly highs, or contract highs, rather, yesterday, I believe, in all the wheat exchanges. We have the March Kansas City wheat currently down 2.5 cents. We're now at 607, make it 2 1/4 lower now, about in the middle of our trading range, or in the lower half, just barely. And looking now at our spring wheat trade in Minneapolis, March is now back to unchanged at 607 1/4. Can't decide which way it wants to go, at least for the time being. Cotton market has been trading higher this week. We're up 15 points on March at 80.50 cents per pound. We'll come back and we'll talk more with Brian Hoops. This time we'll take a close look at our livestock trade on a Wednesday when we come back. We're talking with Brian Hoops right now. He's with Midwest Market Solutions. And Brian, I always like to check in with you to see if you've heard anything in your sources about any cash cattle trade. We are in the middle of the week. Anything going on yet today?
Well, so far, nothing from the packers. I've heard, no sales. We've seen some bids, 175 on a dress basis in the north being passed, some 112 bids in the Southern Plains this morning. That is the same as last week. But I think a lot of packers kind of waiting on the cattle exchange, see how that auction turns out this morning. and it looks like no sales on the auction. They had some bids that were in that 110 to 112 range, but not enough to stir any interest in selling at that price. So it does appear a lot of the feedlots looking at hoping out for higher money compared to a week ago.
I would imagine the feedlot managers have got to be really nervous right now when they look at their bottom line and they look at those escalating feed grain prices over there. I mean, they're just out of necessity going to have higher prices just to even break even or make a little money.
Yeah, you would have to think that would be the case. I think that's why they're holding out for a little bit higher money, is they want to be compensated for the increased feed costs. And, hopefully they've had the chance to lock in some of their feed expense so they're not paying these higher prices. They did that during the fall time frame and locked in a lot of that corn expense. That's a really good time to do it when we're harvesting corn. And hopefully that's the case. It looks like the Fed auction is going to have another sale tomorrow, carrying some of this inventory over and hoping to get some business done on Thursday.
Well, looking at the live cattle futures with our quotes provided by bar chart here, February currently down 32 cents, and we're at 114.72. This thing has been gyrating around on both sides of unchanged here during the course of the day. About an hour ago, it was all higher. Now we've turned lower again. On the feeder cattle market right now, you have March down $1.57, and we're now at 135.85 after a high this morning of 137.50. So that means we have carved off of there about $1.70 from our earlier high. It's pretty significant. We're down there within just one tick of our low of the day now. And on the lean hog trade, well, as we switch over there, we have February 97 cents lower. We're at 69.95 after a high today of 71.75. So there you are off our earlier high by about $1.80. So a turnaround on the hog trade now. April currently down 82 cents. We're at 73.27. Well, Brian, good to visit with you again. Happy New Year to you, since I haven't got to talk with you yet this year, I don't believe. But anyway, wish you all the best. Brian Hoops, Midwest Market Solutions. He's based in Springfield, Missouri. Tammy, I'll turn it back to you.